Would you rather lend to Microsoft or the United States government? In today's video, we are going to be comparing these two options that you might have. And in today's interest rate environment, Microsoft bonds are paying about 0.5% more than the United States government pays. And so what that means is if you let Microsoft borrow your money for 30 years versus if you let the US government borrow your money for about 30 years, you're going to get about 0.5% more taking the risk investing with Microsoft. Well, so the question then becomes, is it actually more risky? Well, let's look at this chart here. This looks at the interest coverage ratio, which, what does that mean? That is essentially a representation for the organization's ability to pay their debt. And the bottom line is the US government at about 5.2 times, which means for every dollar they're bringing in, okay, what is their interest rate coverage? They're bringing in about 5 times more than they have to pay in interest, which is not very high. Versus Microsoft is bringing in about 50 times more than they need to pay their debt. And so if you just look strictly at their ability to pay their debt, Microsoft is more financially stable and has a better ability to pay its debt than the United States government, and it's not even close. And so Microsoft's going to pay you more. It seems to be more healthy. The one clear variable here is Microsoft does not have the ability to just print money to pay their debts, and the United States Treasury does. And so when it comes to the financial health of either of these organizations, there are very different risks that you're taking. With Microsoft, you're getting barely more interest than the air quote risk-free rate, and anything can happen to any one company, in particular over 30 years. And with the US government, you're dealing with the uncertainty of political uncertainty, the inflation risk of what if I accept a low rate of return and inflation eats away my returns. And here's the short answer here. When you're looking at these two options and you're saying, okay, my options are lend money to the United States government for a very long period of time, get a low rate of return, and who knows what's going to happen. Okay, that's not a great option. Or lend money to Microsoft, which might be a great company, but there's still unknown risks and they're barely giving me any more money than lending to the United States government. So that doesn't seem like a good option either. And so while it's a fun intellectual exercise to compare the two and to compare the two fundamentals, the key is you don't have to invest in either because neither one of them are a good risk-return trade-off. And so, like I always say, you should know what you own, and as long-term investors, you should be able to say, am I being compensated for the risk that I'm taking? I hope you found this helpful, and as always, thanks for investing your time with the Personal CFO.